Hello, everybody. Carolyn Williams here with Money Reverse. Come right on in if you are here for Stock Savvy Sessions, because that's what I'm here for. When you arrive, can you just post in the comments Stock Savvy? That lets me know that we're here for the same thing. And it also lets me know that you hear me and that the mic is working and all of that. So wherever you are, if you are ready for Stock Savvy Sessions with Money Reverse, come right on in. Post in the comments, Stock Savvy. Now, one thing I'm going to mention is that I am broadcasting on several platforms. Yeah, I see my Stock Savvy. Yeah. Okay, now I am broadcasting on several platforms. Now, if you are watching me on Twitter, I want you to know, please enjoy the class. But because of the software, you're not able to post comments. So if you want to post comments, because I do want to hear from you, but if you want to post comments, I'm going to say if you can join me on the Money Reverse Facebook page or Money Reverse YouTube, you can post comments on all of those. So those of you on Twitter, I want to hear from you too. It's just the technology will not allow you to comment. Look at all of the Stock Savvies that I see in the comments. Hey. Stock Savvy, Gladys say, come on, y'all. Gladys say, come on for Stock Savvy. Yeah. Now, y'all can't make me act silly. Don't do that. It does not take much. It does not take much at all. And all I gotta do is see you guys get excited for Stock Savvy. And I'm gonna be just acting silly the whole time. But we got a lot to cover today. Now, how many, if you were here for the day one session, which was held yesterday, just say day one. If you were not here for the day one session, just say missed it. Put in the comments, missed it. But the day one sessions are right here. They're on the platform where you're watching right now. So I want you to go back and watch the day one if you missed it. I want to kind of get a feel for how many are new here and how many are coming for the first time, because we're going to build on what's on day one. And we gave you homework and all of that. But I want to just see how many are here, because I'm going to go further. You're going to go somewhere with me in these 4 days of Stock Savvy. So I want to say, if you were here, just say, that you were here. I see Kennard. I see lots of y'all missed it. Okay, if you missed it, okay, I want you to go back on the platform where you are right now. Not right now. You're going to stay right here. We're going to review day one. But if you missed it, I do want you to go back and watch the full lesson. I'm going to do a short review of that lesson, but I want you to go back and watch that so that you can make sure that that you get everything. And just like we got here, watch the replay. That's what I want you to do. There's something to learn. Okay, let's get started. We're going to get started in a word of prayer. So everybody, now I want to tell you, Money Reverse. Let me start in word of prayer first. Word of prayer. Father God, thank you, Lord. Hallelujah. We give you glory, Lord. I worship you because you're worthy to be praised. Lord, I thank you for every heart, for every mind that's joining the Stock Savvy session, whether live or watching on the replay. Lord, I thank you that every heart is positioned for abundance in the name of Jesus. Lord, I thank you that hearts, that minds, that information, that mindsets, that strongholds against abundance are being broken in the name of Jesus, that we're seeing transformation in the financial lives of all those associated with Money Reverse. And in this Stock Savvy session, you be glorified, Lord. In everything that we do, we say you be glorified, because it's you that we honor. And in your Son, Jesus' name, I pray. Amen. Amen. I was about to go in. I had to cut that short. Hallelujah. I was about to go in, y'all. Not right now. Not right now. Can you just say not right now? Not right now. Because it don't take much for me. Okay, let's get started with Stock Savvy. I want to just start sharing with you We're going to start going through the teaching for today. This is day 2. Day 2. Now, money reverse. Money reverse. If you notice the name in my brand, money reverse, the V is capitalized because we focus on the verses of the Holy Bible as the foundation for everything that I teach. And so money reverse is for reversing the substandard financial conditions in the body of Christ. And so the biblical teachings are just going to come up. They do. So that's not only my brand, it's my promise. That's just how we're going to start out. So we always start out with a biblical investing lesson. So here we go right here. A biblical investing lesson. This lesson is let him lead you to that place of peace. It's Psalms 23, verses 1 and 2 in the New King James Version. And it reads, "The Lord is my shepherd, I shall not want. He makes me to lie down in green pasture. He leads me beside the still waters." Now, again, that's Psalms 23, verses 1 and 2. And the lesson is, let him lead you to that place of peace. I do want you to know this is a video. It looks like a video on the screen because it is a video. And the video is in Money Reverse University. As a matter of fact, let's post the link for Money Reverse for Stock Savvy class. Let me post the link here. And I'm going to ask my virtual assistant to also post the link so that you can register for the Stock Savvy class if you haven't already. It's a free registration. What we're going to ask you for is your name and your email address, and you can register for the course. When you enroll in Money Reverse University, then you go and sign up for the Stock Savvy sessions. It's a two-part process. Now, when you get there, you're going to see in the Stock Savvy free course, you're going to see all of the homework and these videos that I'm talking to you about. Let him lead you to that place of peace. It's a 3-minute lesson, just in a short, brief synopsis. A lot of times we may have anxiety in the things that we do in life and in the things finance. I want you to let the Lord be your shepherd in your investing. If you find that you are anxious about things, that you're worried, that you don't know what to do, that you put money in, but then you can't sleep at night, I'm going to say, let's take the money out and we need to go do something else. We need to get you to that place of peace because the Lord will lead you there. I can't lead you there. I can tell you how to get there. And it's going to be, let's go to the Holy Spirit and ask the Lord to lead you to that place of peace. Because if he's moving you to elevation, he's moving you into new things, which means it's not going to feel like the old things. Things are not going to be the same. And you've got to be okay with change. Every prayer that we issue is a prayer of change. So I want you to be okay with change. Let him lead you to that place of peace. Look at this lesson. It's about 3 minutes and it's in Money Reverse University. So let him lead you there. And be blessed, everybody. The information provided here today is for educational purposes only. Any market information that I share is purely commentary and should not be construed as investment advice, nor should the information be construed as a solicitation to buy or sell any securities of any kind. Now, let's do a review. For those of us that did not make yesterday's day 1 session, we're going to do a quick review of yesterday's session on inflation. We talked about inflation. So let's just do a quick review. What inflation is a general rise in the price of goods and services. It's just things rising in price over a period of time. Inflation has always been around. We have inflation all the time, every year. It's just that it's kind of like when you're if you've gone on a cruise. If you went on a cruise 20 years ago, and then you went on a cruise, recently, because that's what I did. I went on a cruise 20 years ago, and then I went on a cruise recently. Well, recently was in the last 5 years. I noticed that when I was on the cruise 20 years ago, the boat was really rocking. I could feel it all the time. And when I went on a cruise a few years ago, it was like just standing on solid ground until you got to rough waters. So inflation has always been around. It's just that it's been kind of just moving, but we haven't felt it, kind of like the cruise was. But when it gets to those rough waters, you feel it on the cruise, right? So that's how inflation is now. So we always see prices rise. And so what we have here on the screen, take a look at the inflation rates. Remember how I say just smooth sailing? Look all the way down from 2010. It's in 2011, we had 3.14% inflation. Everything else has been under 3% until we got to the year 2021. Which 2021 and 2022 are in red. 2021, our inflation rate was 7%, December 31st. Since then, it is now April 24th, and our inflation rate is 8.5%. It's gone up from 7 to 8.5% and since the beginning of the year, so in 4 months. Now, one thing I do want you to know is these gold columns are the projected rates. In 2019, I started tracking this, and I would always look at it, but it was always pretty much the same. But I kind of looked at it a couple of years ago, and I saw what they were projecting. The reason I do this is when I work with my retirement clients, when we're planning for what you're going to do, what your money's going to look like in retirement, the one thing we take into account is inflation. I don't want you thinking that you can have your, your $7 now and get a Happy Meal, or get a McDonald's meal or something, or get a fast food meal. You've got to, down the line, if you're talking about living 20 years after retirement, $7 isn't going to get you a fast food meal. I can't even say the words. So with that, we plan for inflation when it comes to my retirement clients. We're working through to make sure that we take that into account. Now, one thing I do want you to know is that inflation is at an all-time high. This 8.5% is a 40-year high, not an all-time high. I correct myself. It's 40 years. 40 years. We haven't seen inflation like this in this long. So of course we feel it. Now watch the full lesson that we did yesterday that talks about inflation, because I define it and kind of go into a little bit more detail. One key thing that we said yesterday that I want you, and I ask everybody to post it in the comments because I want your fingers to say this. Post this in the comments. When inflation is high, markets trade down. I want you to post that in the comments. When inflation is high, markets trade down. The reason I want you to post that in the comments, and I asked you to do that yesterday too, is because I need you to know that. I don't need you to ask, why is something going down? Oh my God, I'm in the market. Why are stocks going down? I want you to look and see what inflation looks like, because when inflation is high, markets trade down. I need you to know that, everybody. So if you ask me, do I think that markets are going to, because we've seen a pullback, and in our day one session, we talked about how markets have pulled back ever since January, because when inflation is high, markets trade down. So we saw that at 7% inflation in December, and now it's at 8.5%. And we also saw how at the beginning of the year, we saw the highest that all of the indices have been. And now they're pulling back, and we're moving into market correction territory. The two are related. When markets are high, when inflation is high, markets trade down. I need you to know that. I need you to know that. Do not be scared, because it's not about the company that you bought. It could be that the company stock that you own, there's nothing wrong with that company stock. It is a systematic trading down, and that's what's happening right now. And I love it when this happens, because you want to be in good companies that has a broken system, instead of being in a bad company a broken company in a good system. So you don't want to buy bad companies right now. You can buy good companies at really good prices, because when inflation is high, markets trade down. Hetty has the reason. That's the reason. You see what I mean? I need you to know that. When inflation is high, the markets trade down. There's nothing wrong with your portfolio. It is the overall market is trading down. I hope that I have said that so much that you cannot forget it. I hope that I've said that so much that you cannot forget it. When inflation is high, markets trade down. So what do you think? So now let's talk a little bit more about inflation. Just keep that in the back of your mind as we go further. So you say, what caused inflation? Let me tell you some major causes of inflation. There's 6 major causes, and we're going to talk about 4 of them. The 4 that are highlighted, we are going to talk about. Number 1, when there is an increase in production cost. Number 2, when we have an increase in demand for things. Number 3, when we have an increase in the money supply. And number 4, when we have rising wages. Those are 4 major reasons that inflation, 4 major things that causes inflation. There's 2 others that we're not, but we're going to talk about these 4. There's 2 others, and I put them there in light gray so you can see them. I don't want you to think that these are the only reasons for inflation, but we're going to talk about these 4 right here. Now, let me kind of detail some of this. The first one, increase in production costs. Whenever it costs a company to produce, it costs a company more money to produce something, they're going to charge more money for it. It makes great sense, doesn't it? It makes good sense. So the rising cost of production and delivery, it's going to be passed on to the customers, okay? So an example of that is when lumber increased in price, the cost of getting lumber, the cost of building houses, the cost of getting remodel jobs done, the cost of getting, some steel products went up because there was just an increase in the cost to make the products. And part of that making and delivering the products is getting it to us. So with that, let's think about what happened during the pandemic when we had a price increase in lumber. I'm going to go through these and we'll talk about what caused all of this. If you have an increase in demand, if you have more people wanting something than you have access to, then the seller can ask more money because the buyer is willing to pay more money. Fair market value. Fair market value is an agreed upon price between a seller and a buyer when neither one has been coerced to do such a thing. He's like, okay, well, this is worth this. Yeah, sure, I'll pay that. There you go. An example of this is, we see it all the time, is when you have a demand for a concert ticket. Suppose it was a concert ticket. Tell me the concert that you remember going to, whether it's a Prince concert or whether you saw Gladys Knight and the Pips. Just as a matter of fact, I just want to see what concerts y'all have been to. Put in the comments what concert you've been to recently, or it doesn't matter if it's recent or a long time ago. So just put somebody's concert in there. If you were trying to go to this concert again and all the tickets were sold out, you see this all the time when you go to a concert. Somebody has a ticket and they're outside the venue and they are selling this ticket for double the price of what the fair market, what the asking price is. They can do that. And you know what? People buy the tickets. That's an increase in demand because this seller has the ticket and they say, I know you will pay this price. I'm going to ask this price. So we see that all the time. So increase in demand is something that causes inflation, a general rise in the price of goods and services. Yeah, I'm looking at, Bruno Mars, Matt Kearney last night, Bruno Mars, Kim, and y'all doing stuff. Y'all doing stuff. Several years ago, Charlie Wilson, y'all done been to some concerts. Luther Vandross, y'all done been to, so y'all know what I'm saying. So y'all know that when you go to the concert, there's somebody going to sell tickets outside. Shirley Caesar, a long time ago, y'all know what I'm talking about. You've seen those people. Why are they standing out there holding those tickets at double price? Because there's a demand for it. So an increase in demand causes the price to go up. Now, an increase in the money supply is also, we're still talking about major reasons for inflation. An increase in the money supply. This is when there's more money in circulation and all the products and services rise to balance the demand because everybody has money. An example of this is a high-end restaurant. A high-end restaurant that has a small venue, they may have 8 tables. Each table can seat 2 or 4 people, white tablecloths, very small parking lot, just a few waiters. They have their exclusive menu written on a chalkboard where they change the menu on a regular basis. A very, very nice venue like that. And it's very high end because they have a very select clientele. Now, when everybody gets money, they say, I'm going to exclusive restaurant number 8. I'm going over there too. I couldn't afford it. But now I can. So what if everybody gets a price increase and this restaurant gets so busy that they have a line outside the door, that their waiters are trying to hurry people up to get them out? They're like, no, that's not the experience we want. So we're going to raise our prices so that we can control the demand, because only the people that have X amount of dollars of expendable income can come to this restaurant. Now, if they don't do that, then they've got to expand their parking lot. They've got to remodel their restaurant. They've got to add more tables. They've got to add more wait staff. That's why they raise the prices. Does that make sense? If that makes sense, say make sense. So when everybody has more money, then you can't control the demand for things, because things that are built to be exclusive, like a very high-end restaurant, they now have a demand that they had not planned on, and it's causing them to have to expand their services, hire more people, and therefore take their prices up. And sometimes they just take their prices up so they can control the demand. So an increase in money supply will also cause prices to go up. When everybody has money, then everybody has a dollar, it's not worth anything. Okay? And then rising wages. When everybody's making more money, then it causes an increase in production cost, an increase in production costs, because it's costing more to pay the people that work for you. So when the wages go up, it also creates an increase in demand. If you have higher wages, you have more money, so you want more things, so you start to buy more things. And then when you make more money, it increases the money supply in the entire economy. So with that, that means that high-end restaurant says, oh, Lord, we got a line out the door. We want our people to be able to come in here and sit at the table for 2 hours if they need to. We're not going to rush them out like McDonald's. That's not what we're trying to do. So rising wages also creates inflation because it causes number 1, 2, and 3 to be in effect. Okay. Now, when wages are rising higher than the inflation rate, then that's when you have a lot of money in the economy. Now, this is making sense. I see Marcine says this makes sense. If this makes sense to you, just say makes sense, because there's things that are happening in the economy and you're hearing about it, but you think you don't understand it. But I want you to go back and watch the news from today forward, and you're going to understand this more and more, because we're talking a lot about macroeconomics when we start talking about inflation. And I'm geeking out. Anyway. So what caused all this to happen? Think about it. We've seen all of these, haven't we? Yeah. I'm seeing you guys say it makes sense. I know we're sharp people. We're sharp people. You just need it broken down. And all you got to do is get a geek to break it down for you. And call me. I will do it. What caused all this to happen? I'm going to introduce a new word to you. This new word is reflation. Reflation. Reflation is the process of increasing the money supply of an economy by implementing fiscal or monetary policy, putting money into the economy. This is a governmental response to a decreasing economy. Reflation can be achieved through fiscal stimulus, reducing taxes, or adjusting interest rates. We have been going through 2 years of reflation. 2 years of reflation, and this is in response to the global pandemic that hit the world, COVID. So what we did here in the US, our Federal Reserve, I'm so glad that they did, they responded in a way that said, we are not going to let this economy fall like what happened in 2008. In 2008, we had a US banking crisis, and we saw so many banks going out of business, and our economy hit the tank. Boom, 2008, 2009, 2010, we started to recover. And the Fed said, we're not going to let this happen again. So when we saw the global pandemic, our Fed stepped in and they did all of the things on the left here that we have in the red. We saw interest rates decrease, which encourages business and people to borrow money. We saw small business loans. They were called PPP loans. So giving small companies, there were trillions of $3 trillion, I think, was the first CARES Act package. And I think we got 2 more fiscal stimulus announcements that came. And it was giving businesses money to pay their workers when they couldn't come to work. Tax deadlines extended. Remember, our tax deadline was not April 15th. It was extended all the way, I think, till July of that year. And so then people that owed tax, they got kind of, they were able to push their tax payments back. If you were unemployed, we saw you got extra money added to your unemployment check. And not only that, but your unemployment was extended for a number of months. People that should have run out of unemployment continued to get unemployment. So all of these things happen. And I am glad that the Fed did this because it really helped our economy to do well. It really helped our economy to do well. But the bottom line is, we didn't pay the price of COVID when COVID hit because of reflation. Now we're going through the process of correcting this. So now we're starting to pay the price of COVID. Because we saw all of these things during the global pandemic, increase in production cost. Production was shut down. A lot of manufacturing was shut down around the world. In China and Asia, where we have most of our manufacturing come from, they shut down. So guess what? When they couldn't make the products and then they couldn't get them shipped to us, then the cost went up. The cost of just getting it to us went up. So we had to go up on lumber. We had to go up on chicken. Everything, the price of everything went up because of all of these things. People are now sitting at home. There's more of a demand. Wow, I'm sitting at home and I'm getting more money than I have gotten. I'm making more money sitting at home collecting unemployment. So my money is higher. I now got a demand to buy more stuff, right? I'm getting rising wages. I'm making more money. Again, we saw all of this in the pandemic. So does this make sense? These were major causes of inflation, and all of these don't have to happen at the same time, but they did. So we saw reflation where the Fed said, we are going to stop. We're not going to have this economy go down and go in the tankers. We're going to fix it. And what they did was reflation. Reflation is on purpose putting money into the economy. Now what the Fed is doing is saying we've got to start correcting some of this and getting this back right. And when did they start doing that? They announced it in October. So we started to see pullback. They announced it in October. We saw really volatile markets, and they said we're going to stop buying our own bonds and we're going to do tapering, what they're calling asset tapering, correcting the balance sheet. So all of that to say, I'm not going to go too much detail because I can really geek out on this. I love this stuff because when we can telegraph this to what the stock market's doing. We can telegraph this to what the stock market's doing. So in our next session, we're going to talk about how do we fix inflation? How do we fix it? Fixing it is what's going on right now. When Stock Savvy sessions are over, you're going to be able to watch the news and understand what's going on because I'm leading you through. Today, it finished up to about December of 2021. What I talked to you about yesterday and today gets us to December 2021. Tomorrow's session and then the next day, the last two sessions is going to talk about going forward. That makes sense? Okay, so tune in for our next session of Stock Savvy sessions, and we're going to talk about how do we fix inflation. Okay, now if you have any questions throughout the teaching, just type them in the comments, and I will get to your questions all at the same time. Okay, I see that you guys are saying this makes sense. That's good. I hope this is answering any questions. If this is answering any questions that you had, or if this helped you to understand some of the things you've heard in the news, if you're on, can you just give me some hearts or some thumbs up or whatever platform you're on? Just do some reaction to say, yeah, this is answering some questions, and more questions are going to be answered as we go further. But remember, the one thing that I want you to know is that when inflation is high, markets trade down. Okay? I want you to know that. It's good to understand what's going on, but then don't say, yeah, inflation's up. Why is the stock market going down? Just know that's kind of how it works. Okay? Now let's move into stock talk. Stock talk. That was our inflation lesson. Let's talk about stocks now. A friend gives you a stock tip. They come to you and they say, y'all need to know what's going on. This is a good company, and I think that this is a good stock. So I'm just passing on the information to you because, you're my friend, you're my buddy. So I'm going to make sure that you got the information too. Okay? So you say to this friend, thanks, buddy. Thanks. But what do you do after that? I gave you one thing to do yesterday. Today, I want you to answer the questions. The stock tip that he gave me, is this company interesting? And is this stock rewarding? Is this an interesting and rewarding stock? This is what I want you to do next. Now, I want to ask you, if you think that this is something that people on your timeline or in your social media audience would appreciate, can you share this out? We're going to talk about stocks now. Maybe your friends weren't interested in, inflation talks, but we're going to talk about stocks now. So if you think that this is something that you would like to share out on your timeline, then can you just do that right now? I'm going to do that too. I forgot to share it out. I'm going to put this on my personal timeline. Let's see how to do this. Write a message. Let's just share. Okay, hold on. Post. Okay, I did it just that quick. If you shared it, just say, shared it. So let's talk about stocks right now. Is this company interesting? Is it rewarding? Let me tell you what I'm talking about. Somebody gives you a stock tip. I want you to understand, is the stock interesting? The reason that you want the stock to be interesting is because this means that people will be buying and selling the stock. And that means the price is going to change. Change up or down, it remains to be seen. But a company that nobody's interested in is a stock whose stock price won't change. So you don't want to buy stocks that nobody's interested in, unless that's part of the strategy. It's a brand new company that you know about, and you want to buy the stock knowing that it's going to take a while for anybody to become interested in. That's fair. That's fair if that's your strategy. But if you're trying to say, I want to get a portfolio that makes money on the regular, then you want to get an interesting stock. The way you tell if a stock is interesting is that you look at volume and average volume. What volume is the number of stock shares that are traded, which is bought or sold today. If you look at the stock, if the market was open, you look at the number of stock shares that's traded, and trade means buy or sell. How many shares are traded today? And then average volume is the average number of stock shares that's been traded, bought or sold of this same stock over 30 trading days. 30 trading days. Now, there are no trading days on Saturday and Sunday, so assume a trading week is 5 days. So 30 days is 6 weeks. So volume is how many shares are traded today, and average volume is how many shares are traded over a 30-day trading period. Now, I want you to look at this number, and I want you to know this observation, this money reverse observation. If the company average volume is less than 1 million, I want you to consider that an uninteresting stock. I want you to consider that the company is not interesting if they're not trading over 1 million shares for the average volume. Okay? So with that, this is interesting. We want to look for interesting stocks. And you don't have to go count them up. Let me show you how we find this. We go back to that handy dandy stock quote that we've been looking at, and we will see volume and average volume. Take a look at it. I got arrows pointing to them. Here we go. With this particular stock, this is Coca-Cola, which is the example that we've been using. And the average volume, which is the number of shares traded today, and this was as of Friday, April 22nd. The volume was 14.7 million, and then the average volume was 18.4 million. So remember, an interesting stock is stocks that have an average volume greater than 1 million. This one is definitely an interesting stock. So this one is interesting. So with that, everybody get it? So this is where we look for volume and average volume. We go to that handy dandy stock quote. Okay? Now, I want to talk to you about rewarding. What a reward is where you get something given to you or awarded to you because you've done something good or you've done something well. So that's what a reward is. So when I say rewarding stocks, I want it to be a stock that rewards you for holding it. And the way they reward you is just by dropping money into your brokerage account on a regular basis. So that is called a dividend. A dividend is where a company takes a part of their profits and they use that in the form of cash and they give it back to the shareholders. So by holding shares of this company stock, you can look in your account on a regular basis. Typically, they're quarterly payments, and you can see that they put this in your account as cash. So with that, it doesn't matter if the stock price goes up or down. When they announce a quarterly dividend, now the dividend has to be announced. The company has to declare it. So this is not a rule. This is just something that companies do because they want you to hold on to their stock, right? So they reward you. Now, do you think that I own company stocks that pay a dividend? Of course I do. In my portfolio. Do you think that I own company stocks that don't pay a dividend? Of course I do. Not paying a dividend is not a reason to not buy the stock. If this is only one thing that you look at. If I see another reason that I would buy this stock, and the only reason that you want to own a stock is that you want it to make you money. We're not trying to make any type of statement here. We're not trying to show any company loyalty. When you're in the stock market, what the Carolyn Williams philosophy is you're only here to make money, period. We're only here to make money. I'm not trying to make a statement. I'm not trying to buy Christian companies. I'm not trying to buy the company stock of the company that I own, the one that my grandfather worked for. No, 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 no. If they make money, then I will buy them, but no other reason. So I want you to understand my philosophy, because that's my philosophy, because sometimes I may sound kind of cutthroat. You know, it's like, oh, but it's a company and they're coming back. You know, it's a Christian company and they're coming back. I'm like, baby, I'm going to pray for them. But if they ain't making no money, I ain't getting in it. Okay, if I don't see how I'm going to make money with that company stock, then I'm not getting in it. That's just not what I do. You know, I do ministry somewhere else. I'm not doing ministry in the stock market. Does that sound cutthroat? Just so you understand my philosophy, so don't be shocked. Now, a dividend is a reward. So there are companies that will just drop money in your bank account for holding their stock. Now, the yield is the percent of return that money that they dropped in your bank account is. Are they going to pay you 0.5%, 1%? Are they going to pay you 0.5%? So the yield just shows you how much money you'll be making. So with that, let me show you how let's take a look at how do we know if a company pays a dividend, because all companies don't. Take a look here at our example stock, Coca-Cola. Here we go. Now, when we pulled up this quote, you can see the dividend right here. It's called forward dividend and yield. Yield is the same as dividend yield. When you see the word yield, that's what that means. Now here with this particular quote on Yahoo Finance, the way they represented, the first thing is the forward dividend, which is forward looking. And this is 1.76 cents. This is quoted as an annual amount, $1.76 for every share. And this is quoted as an annual amount. So if they pay out quarterly, which I know they do, you take that $1.76 and you divide it by 4. Okay? You divide that by 4. That's how much you will get quarterly. And that annual amount is 2.66%. So by buying and holding Coca-Cola stock, you will make 2.66% on your money just in dividend. If the stock price goes up, you make that also. So this is a place where you can make money just by holding the stock. Now, if this company stock price goes up also, you make money 2 ways. And those are the only 2 ways that you can make money in the stock market. The only 2 ways. One is price appreciation and the second is dividend. There's only 2 ways to make money in the stock market. Price is at a better price afterwards, then you can also make money on dividends. So now with that, I hope you know how to see if a company is paying a dividend. Okay, good deal. Interesting. This is an interesting and a rewarding stock. Both on this particular one, Coca-Cola, they're trading more than 1 million shares for the average volume, and they're paying a dividend. The answer to both of those, is this interesting and rewarding? Yes and yes. Oh, yeah. Now, I am going to give you a bonus topic. You know what? Before I do that, I want you to know I do this every April as a part of National Financial Literacy Month, and I get so excited that I go over. I want this to be 45 minutes. I went over 45 minutes last night. I'm over 45 minutes tonight. We're at 44 minutes right now. If this is too much, just say too much. Just say too much in the comments. I understand. But I just keep want to give you more and more stuff. So I got a bonus topic for you. And I think I'm going to have a bonus topic tomorrow too. Anyway, if you like bonus topics, just say, I like a bonus. I want to know, because I'm taking you over time. So Trent says, no, keep going. Yay! That's all I needed. If you want me to keep going, just say keep going. Oh, because I want to teach you so much stuff. Y'all, I love to teach. Oh, look, Ginger says never too much. That's Boston right there. She's in Boston. And she comes to Texas to this Stock Savvy session every April. Thank you, Ginger. I call her Boston, but her name is Ginger. Oh, keep going. Look, Kennard says, keep going. Kennard says, keep going. Go, girl. He said, you go, girl. Yeah. Okay, let's do it. We're going to keep going. So I'm going to teach you this bonus because I had already put it in here because I already said that, but I knew I'd go over time. So I do apologize for that. I did kind of promise that it was going to be 45 minutes. But take a look. The bonus topic is the ex-dividend date. The reason I want to teach you this is because I'm talking about dividends. You need to know this one too. You need to know this one too. The ex-dividend date tells you, do you get the dividend or not? Because the dividend that they announce, when the company does a declaration for a dividend, they say, hear ye, for everybody that holds my stock by this day, we are going to pay you this amount on this day. So it's not forever. They're going to make a declaration and they're going to put a time frame in there for when this dividend is going to be paid. How you determine if you're in that time frame is the ex-dividend date, because this date is the first day that you can buy the stock and you will not get the dividend. The ex-dividend is the first day that you can buy the stock and will not get the dividend. Okay, you will not get the dividend on the ex-dividend date. So what that means is you have to buy, to get the dividend that's declared, the ex-dividend date has to be a date in the future. Remember, ex-dividend is no dividend. Ex-dividend means no dividend. Can everybody say ex-dividend means no dividend? So if you buy it on the ex-dividend date, you're not going to get the dividend. It has to be, you have to buy it before the ex-dividend. Can you say ex-dividend means no dividend? X means no. You'll never forget this. You'll never, thank you. Thank you. Ex-dividend means no dividend. Ex-dividend means no dividend. So don't buy it on the ex-dividend date thinking that you're going to get the dividend that's going to be paid recently. Now, there could be a reason that you buy it on the ex-dividend date. If you take more classes from me, I'll tell you all kind of tricks. Because you know what's going to happen on the ex-dividend date when people realize they're not going to get a dividend? People sell the stock. You have to hold it before you have to get it before the ex-dividend date. So you know what's going to happen on the ex-dividend date? The stock price is going to drop. Could be a time to buy it, but you got to have certain reasons to buy it. So just remember, ex-dividend means no dividend. And if you're interested in more advanced things, especially things for quick money, when I work with my traders every day, this is the kind of stuff we're doing. We're going in today because we know that stock price is going to drop and we got a plan and we're trading for right now. This is kind of stuff we do and we have fun. Okay, now let's show you how we see the ex-dividend date. The reason I wanted to teach you that because it's right here. It's right here. Take a look at it. The ex-dividend date is right below the forward dividend and yield. So take a look at this one. The ex-dividend date is March 14th, 2022. This stock pays a dividend. Coca-Cola pays a dividend, but March 14th, 2022. This is after ex-dividend is no dividend. So with that, if you buy Coca-Cola now, they have not announced a new dividend yet. When they announce a new dividend, this ex-dividend date will change and it'll be a date in the future. So if you see this and you want to get the dividend, don't buy Coca-Cola right now for that dividend. Now, if you look at Coca-Cola and you research them and you find that they have traditionally paid a quarterly dividend, this would be a good time to buy them for the next dividend. They haven't announced it yet, but the stock price, when they announce the dividend, the stock price is going to go up. So you just want to know what you're doing. I want you to know what you're doing. It makes good sense. And I just want you to make smart trades. Okay? Now, that is it for today. Let's do the let's see it. That was the lesson. Now, let's do some let's see it. That before I was teaching you about it, now I want to show you how you would see it, even if I didn't cut the quote out and put it on the screen for you. Let's see it. Let's look at the things that we've learned today. We're going to use Microsoft as the example stock, and we're going to use Yahoo Finance, www.finance.yahoo.com. www.finance.yahoo.com. And you can also download the Yahoo Finance app, and you can use that as well. I have no relationship with Yahoo. I'm not getting paid to push their products or services or anything. I'm just giving you information about free tools that's out there because I think it'll help you. I want you to know that if you pay a company to give you software to do stock research, let it be that you evaluated the free tools and you've decided that what the company's What the paid offering gets you is so much more than what you get in the free tools that you deemed it to be worthwhile. But what I'm going to tell you is I have never paid a company any money to research stocks. I have not bought any software to research stocks. There are so many great free tools out here, and everything I teach you how to use these free tools. And I teach you also what you can expect from these free tools. Not all of them are good. Some are good, some are not so good. And we look at several of them. But don't think that you have to pay money for software to start researching stocks. You don't. And I'm going to show you right here a way to do it. And one of them is finance.yahoo.com. Now, we're going to look at Microsoft. So what we do on finance.yahoo.com, this top bar here where you search, if you know the stock symbol for Microsoft, you can put that there. If you don't know it, you just start typing the whole word of the company you're looking for. So in our case, it's Microsoft. Start typing Microsoft right there where it says enter stock quote company name here. You start typing in Microsoft and you will see the options, the drop down list, and you'll see Microsoft Corporation. And when you select that, this is what you'll see. You will see the stock quote for Microsoft. And what I have circled here are key things that you can look at. So here we are, Microsoft, the company. You see the symbol MSFT. You see the stock price, $274.03. That was the last quote, and that's down $6.78 from the last close. This was as a Friday close. What we went through today is volume, average volume here on the bottom left of the quote. And then on the bottom right, you see dividend yield, forward dividend and yield, and ex-dividend date. Take a look at Microsoft. Is this an interesting stock? If Microsoft is interesting, then let me know in the comments that Microsoft is interesting. And when I look at the volume, yeah, they're interesting. They sure are. If the average volume is more than 1 million, we consider that interesting. Now let's look at the dividend. Does Microsoft pay a dividend? Yes, they do. $2.48 for the year. And that is 0.087%. Look at the ex-dividend date for Microsoft. It's May 18, 2022. Wow. Is that in the future? Yes, it is. Yes, it is. Yes, it is. Hey. If you wanted to buy Microsoft for the dividend, now the 248 is the annual amount. So you divide that by 4 because I do happen to know that Microsoft pays out quarterly. Now Yahoo Finance shows it as an annual amount. There's some other tools that show you what the quarterly dividend amount is. But on Yahoo Finance, I just happen to know that they show it as an annual 248. So you divide that by 4 and that's what you will get paid after May 18th. So this is an example of one in which the ex-dividend date is in the future, which means if you bought this today, you would get paid this dividend after May 18th, because May 18th is the first day that the dividend is not paid. So they typically pay sometime after that, and they put it all in their announcement. There's no rules or anything. The company decides how and when they want to do it. Okay, good deal. There you go. Let's look at another example. Take a look at this one. Ellington Residential Mortgage Reit. So with that, go and type that company name in the search bar at the top, Ellington Residential Mortgage Reit. When you type that in, now, as I shared earlier, when you're actually on Yahoo Finance, just look for the quote lookup. And right here under E-Trade, under the little boxes on the right-hand side of TD Ameritrade, E-Trade, and Yahoo, right below there's a quote lookup. You may not be able to see it, but no matter where you are on the screen, if you have Microsoft up, you don't have to go back to the front screen to look up Ellington Residential Mortgage REITs. Just go to the quote lookup and start right there. And I'm sure you'll figure that out once you get in there, do it. So when we pull that up, when we pull up Ellington Residential Mortgage REIT, the stock symbol is EARN, E-A-R-N. Look at the stock price, $8.94. Look at the volume. Is this stock interesting or not interesting? Average volume is 150. It's hard for me to see what the average volume is. But is this interesting or not interesting? And the question on the floor is it under $1 million? If it's not interesting, it's under 1 million. This is not an interesting stock, meaning it does not have a lot of volume. Now, I may be interested in this stock for another reason. Take a look at the forward dividend and yield. They pay $1.20 a year. That's 13.73%. 13%? Did I see that right? Do y'all see that? 13%? That's enough to make this interesting to me. You see what I'm saying? So it doesn't matter. When I say it's interesting, that doesn't mean that you don't want to buy it. You want to look at several things to determine if this makes this thing interesting. Having this thing pay a 13% dividend is definitely enough to make it interesting. Take a look at the ex-dividend date, April 28th. I know somebody here that has a birthday on April 28th. If anybody here has a birthday on April 28th, just put in the comments, happy birthday to me, April 28th. And watch who comes up, y'all. Okay, the ex-dividend date, April 28, 2022. Today is April 24th, 2022. So if you have $8.94 and you want to buy this stock when the market opens tomorrow, then you can buy this stock and you will get a dividend payment. Now, I want to tell you but there's more. But there's more. More. Can you say more? But there's more. I told y'all don't make me act silly. All y'all got to do is answer my questions. I'm going to act silly. I'm sorry. So with that, take a look at this thing. I want you to know that this stock pays a dividend monthly. This stock paid dividends monthly. If you are looking for portfolio income that can come every month, then you may want to consider some stocks that pay a dividend monthly. This one is a very low price stock, and it is a Reit, R-E-I-T, Real Estate Investment Trust. So it has to pay a dividend. And this one just happens to pay monthly. Now, I happen to know that. I didn't know that. I'm not looking at anything on Yahoo Finance to tell me that. I'm looking at some different things because I have a whole listing of companies that pay dividends monthly. Companies that pay dividends up to 30%, 25%. I have a whole listing of dividend paying companies. And I share them with my group. I have many in my portfolio. I use them with my clients as I'm making recommendations for people that are looking for monthly income. So this may be one. Suppose if it pays $1.20 a year, $1.20 a year. If you bought 100 shares of this would be just under $900, and you would make $120 a year on just this one stock. What if you had 5 of them? What if you had 5 stocks like this? What if you had stocks that paid higher than 13.73%? So just want to let you know there's some opportunities out there, and I want to make sure that I let you know what to look for. So I do want you to know that this exists. Now, it is time for homework. If you want homework, can you just put in the comments, I want homework, I want homework. Now, I didn't see a lot of people doing homework. Let me talk to y'all a little bit. Hold on. Hold on. I didn't see a lot of homework completions out there from our day 1 class. So let me know if you just didn't have time. If you didn't have time, I understand this is an optional class and it's a free class, so you don't have to do it. But one thing I want to tell you about homework, when you do the homework, it doesn't take a lot of time, but it is going to, once you do it one time, you will never forget this. You won't forget it. This will not be the difference between doing the homework and not doing the homework is a difference between sitting in a webinar and taking a class. How many webinars have you sat in that you don't remember anything that they said 5 days after the class was, after you left the webinar? You go, yeah, I took a webinar on something this week. Let me see, what was it about? Oh yeah, they were talking about this, and what did they say in there? It was some good stuff, but you just don't remember because we have so much information coming to us. So one of the ways of learning is kinesthetic learning. So when you do it, it helps to seal the deal. So if you want to have this and hold this as information that benefits you, I'm going to invite you to do the homework. And let me know if you tried to do the homework, but you couldn't do it. And let me know. And if there's a problem, we can fix it. I want to make sure that I fix any problems. It's possible that my virtual assistants and I didn't do things right. So just let us know if you're trying to do it and not able to do it. Come back to where you're watching this and post in the comments if you can't do the homework, because we're watching for your responses. Okay, so here comes the homework. Here comes the homework, day 2. What I want you to do is I want you to go to your day 1 chosen stocks, and I want you to update those with volume, average volume, dividend yield, and ex-dividend date. So go to the homework sheets where you put stocks in and update volume, average volume, dividend yield, and ex-dividend date. Now, what I want you to use for your research is use Yahoo Finance, and that's exactly what I demonstrated here. Now, if you didn't do the day 1 homework, never fear, you can do that. I see that Kennard said he did it right before class. He did. Kennard, I did see your homework. Thank you. Thank you, Kennard. Congratulations to Kennard. He is the only one I saw besides myself do homework. So Kennard gets the homework award for today. Thank you, Kennard. And he did it right before class. And he actually did both yesterday's and today's. So he was able to do it very quickly. So with that, you can catch up. Don't think because you didn't do yesterday's homework, even though I fussed at you a little bit, you can catch up. You can catch up. Just go out there and sign on. And what you have to do is register for Money Reverse University. Go enroll in Money Reverse University. And then once you enroll in Money Reverse University, then you go and register for the free Stock Savvy sessions, for the free Stock Savvy. So then once you get in there, everything will look familiar. So with that, now let me show you what it looks like. This is what our homework sheet looks like. So with that, you can see that all that's going to be provided here is the company names. The first one in yellow is an example that's done by our virtual assistant, Hetty Watkins. She did PayPal, and she put all of the information for PayPal right here on the line. I have it circled here. So what you would do is you would find companies, go find 2 companies at a minimum. And so what you can do is just go out here, and the first column is claim by, put your name there to say, I'm going to do that one, just so somebody else isn't researching the stock at the same time you are. And then you go research the information and enter it right here on this sheet. It's a shared sheet. So with that, it's a shared sheet. So you don't have to download it or anything, and you'll be able to see everybody's homework assignment and everything else. So with that, go ahead and do that. If you want to capture more than 2 companies here, you can do that. And I want you to add 1 company of your own that you want to research to the bottom of the list. And so you can research that one as well. And if you do that, I promise you're not going to forget what was in this course, because you heard it, you understood it. I asked you if you understood it. Everybody said they understood it. I know there's a few questions here, but for the most part, you all got it. So you understand. Now you just got to commit it to memory. You got to do it so it clicks something. It's like that's where those gears connect, is when you understand it and then you do it. That's where it connects and locks. And that's what we want to do, is lock it in. Okay? Now, take a look here, everybody. This is the end of our Stock Savvy Sessions Day 2. Today is Sunday, April 24th, 2022, 7 p.m. That one is crossed off the list. We have 2 more Stock Savvy sessions, and we're going to go even deeper in these next 2. So join us here tomorrow, which is Monday, April 25th, at 7 p.m. Central Daylight Time. Join us right here where you're watching us, and we will be right here for day number 3 of Stock Savvy sessions. Okay, now I am going to answer all of your questions. I am more than happy to answer all of your questions right now. I'm going to take a look and see if I see some questions. Oh, it's okay. It's okay, Marcine. You know what? You don't have to. I know I fussed at y'all a little bit, but you don't have to do the homework. You don't have to. I just want you to learn. Okay, so I'm going to post your questions up here. So nobody be embarrassed when I post your questions. I just want everybody to see the questions no matter what platform you're on right now. It says, can you Google what companies pay monthly dividends? Yeah, that's a good way to look for them. That's a good way. Use the tools that you know. Google is a good way to look at it. And once you take some of my courses, then I will show you some other tools to use. But yeah, Google is a way that you can go and start getting some clues and then start doing some research from there. Yeah, good question. Let's see. Everybody wants more. Look, you know what? Happy birthday to me and my grandson. So Joanne Williams, who is my sister, my virtual assistant, and her grandson both have birthdays on April 28th. So happy early birthday to Joanne and Kylan. Happy birthday to you guys. Everybody says happy birthday to Joanne. Okay. Yeah. 13% dividend for earned. Yes, ma'am. I didn't stutter. Okay, here's one of our users. So we have made money on dividends with yields from 13 to 25%. There is somebody that knows what I'm talking about. That's what I'm saying, guys. There is abundance out here. There's money to be made. And this is one way to make money. Thank you for sharing that. Thank you for sharing it. I wish I knew who you were, YouTube user. So with that, let's see. Let me keep looking. I need some glasses to see. Let me see if I see some more of your questions. If you have questions, go ahead and post them in the comments. And I'm going to go back down and look at the questions. Yes, you need to know advanced training to make the money. Yes. Brenda is one of my traders that I trade with every day. And we make money in the market every day. So I do have a quick money trading group. And the whole purpose of this group is we make money in the market on a daily basis. We do opportunistic trading, opportunistic trading. With that, we're trading just to make money. We ain't buying to have and hold. We ain't married no company stock. We just gonna get in and get out. Just show me the money. Okay, show me the money. Okay, so let's see if there's any other questions. I think I saw a couple. It's like, do they always identify it as annual or quarterly, or is it always annual? Now, this is in reference to the dividend. Each platform, each stock research shows it differently. So I think if you go to Google Finance, they're going to show it quarterly. Yahoo Finance shows it annually. And the only reason I know is because I go and look and see what each company does. So what I'm going to suggest that you do as you're starting out, I want you to go look at a couple environments and see how they do it. Google Finance, unless they've changed it in the last quarter, they show you the quarterly amount. I haven't looked at Google Finance in a little bit. Yahoo Finance, I know, shows the dividend on an annual basis. And all of your sites, it's just their choice how they want to show it. So you'll have to kind of look at them and determine which one it is. That's a very good question. Yeah. So as you say it, girl, not a ministry place. Sure isn't. Stock market is where you're here to make money. That's all you're trying to do. This is not a place to do ministry. This is not a place to show company loyalty. This is not where you want to save the world, save the dolphins. So I'm going to buy this stock. I don't think so. No, I mean, I care about the dolphins. I think somebody has a calling to care about the dolphins. I think somebody has a calling to care about the dolphins, but it's not me. You know, You walk in your calling, everybody. Walk in your calling. I'm walking in mine. Thank you for saying this is a correction balance of the stock as I saw a difference. So now I know balance of stock, so that as I saw a difference and now I know why. Yeah. And this is where we're talking about markets trading down. I want you to know that. I want you to know that. There's nothing wrong with your portfolio. It's an overall systematic pullback. If you're in that, just stay. Just stay. Don't sell at a loss. You don't lose money until you sell it. You don't lose any money until you sell. So you just got stocks in the red now. I know I do. And if you're not in the market, this is the time to learn so that you can get in as things are coming down. I bought some of the best profitable stocks that I owned when I bought them in 2008. And we saw the same thing. We saw everything just crash down. And so everybody got the message, right? Trent, thank you for this information. When inflation is high, markets trade down. I want everybody to know that so that you can understand. And don't sell your stuff. Don't sell at a loss. Don't sell at a loss during this. Did the pandemic play a part in the rate being so high, an inflation rate? Yes, yes. I think this was asked earlier in the conversation, and I hope that some of the conversation afterwards showed how the pandemic does play a part. Pandemic is a part of the inflation rate being high. Good, good, good. So that's my goal, is to answer your questions, even if I answer them. That's why I wait until after the teaching. So let's see. I'm not seeing any more questions. I'm going to scroll back to the bottom and see if there's any questions here at the bottom. Okay. My questions are answered. Yes, yes. Let's see. How can you tell on Yahoo Finance if the yield is monthly or quarterly for a company? Okay. Oh, I think that's where you said your question was answered. Yeah. Yeah, we have to kind of look at them. And what I do is I just know these tools. So I just happen to know that Yahoo Finance does it annual, where Google Finance does it quarterly. During this inflation, when stocks are going down, if stocks were purchased earlier, is it a strategy to purchase again at a lower price? If so, how is the price calculated for standing price between the two purchases? Lord, Lord, Lord. He's talking about what I call okay, anybody know what I call this? If you know what I call this, I don't know. I don't think everybody calls it, but I call this what he's talking about. Let me rephrase. He's saying, okay, I bought this stock, and the stock price has dropped with all of this inflation, because when inflation is high, markets trade down. My stock price is dropping. So maybe I can buy more shares that it's lower. I bought this thing at $50. Now it's dropped down to $30. So should I buy more at $30? That is a good strategy. Number one, that's called a buy down. That's where you buy down. You buy more of that same stock at a lower price. And what's going to happen, it's going to average out the price of your purchase by putting both purchases together. The $50 shares, if you bought 100 here at 50, you bought another 100 at 30, your average price is, you're going to have 200 shares of stock, and it's going to be $40. It's going to be $40. So it's going to average together, so your cost basis is lower. So what that does is it gives you more shares of that stock, and it gives you an opportunity to make more money because you've gone in at a lower price. The flip side of that is you're putting more money in a stock that's done you wrong. So now, because it's systematic drop, the company hasn't done you wrong. That's where this is a good opportunity to do that, because everything's dropping. So with that, that's called a buy down. And that is a strategy that I use a lot, to go back and just buy more shares at this lower price. Now, what I do want you to know is that plan for that, watch for that, but know that when inflation is high, what's going to happen? Markets are going to continue to trade down. Let it fall. Let it fall. Don't do a buy down too quick. Don't do a buy down too quick. Very good. Very good question, David. I know David's in Kansas City. Yeah, Brenda knows what that is. We do that all the time in my quick money trading group. We do that all the time. Brenda's doing stuff. Look, I got paid 119 dividend on a stock last week. You sure did, and you made your profit goal. You did good, Brenda. You made your profit goal. We have weekly profit goals in my quick money trading group because we're trying to make money. We're just trying to make money. So we got weekly profit goals, and we measure each week, and I show you how you are. Brenda exceeded her profit goal. I think you did like 130% of your profit goal. You did 100. You did more than 100%. I think maybe about 113% of your profit goal. I'll show you the totals. Okay. So with that, anybody else have any questions? I'm not seeing any questions. Good. I'm glad that makes sense, David. So that makes sense. Okay. Anybody have any questions? Now, I do want you to know that I'm going to tell you, I have my full-blown program, 21 Days to Stock Market Investing. That class is coming up. And this is a class in which I take what we're learning here and I teach you from soup to nuts, buying, trading in the market as if you've never known anything. You start from beginning, and in 21 days, you'll be trading. That program starts in May. So I just want to give you a heads up. I'm going to tell you more about that program, just a little bit more about it tomorrow, and then I'll go through the whole program on Tuesday night. So just know that program is coming up. If you want to get more training after the Stock Savvy sessions, and May is a time for you, it's going to be right after Mother's Day that we're going to start. So you can, the last day for enrolling will be Mother's Day because the class will start the next day. Just keep that in mind, and I will share more information about that so that you can get some of that as you move forward. Now, that's all I have for tonight. I want to say join me here tomorrow for Stock Savvy Sessions Day 3. I want you to sign up and do the homework and have a good time with this. Everybody, happy trading, and I will see you in class tomorrow. If you have any questions, no matter what platform you're on, post them right here. We're going to watch for you, and we're going to watch to see that you're doing your homework. So we're here for you, even though it doesn't look like it. Just post, and we'll know that you posted. Have a good evening, everybody. Bye.